Hello, everyone. Happy Wednesday. It's Brian Downey from Follow the Money Trading. I get the distinct privilege of meeting with Alan weekly, discuss things in regards to the market, where he sees things going, and what instruments he thinks that he would like to be in. So, Alan, how are you doing?
Oh, I am doing fantastic, but I'm going to get better.
Let me look, and I know we were looking at the Dow, but somehow I've seen there, I saw it. There we go.
Yeah,
Um,
I had alerted the group over the weekend that we're going to see a downturn. Now, there's two reasons that this goes into effect. The last 2 weeks of vacation occurs for August. You have people that panic that are going to liquidate their positions going into the high holidays. So then you have a sell off from that. And we were very overextended. So on this chart that Brian put up, you can see that we were at the top. My experience, it will always come back. It's just a matter of sometimes longer than others. That you'll see on the year chart frequency, or the 3-month chart. This is about as overextended the Dow has gotten. And then we got a little bad news. I think Afghanistan was a disaster. So that kind of freaked the markets out a little bit. And I'm really thinking a great position is going to be is to be in oil. Because I got to think with the Middle East, with Afghanistan in play, you might see some oil prices start to do a little spiking. But I said look for that to the middle to the end of the week. Thursday and Friday, I'm thinking. Yeah.
Interesting. And yeah, this is the 3-month chart of the Dow, the 20-day simple moving average on the 3-month chart. And, you can see this pattern here, and you can see this pattern here. We get extended and then basically drop through. So now we're sitting below the 20 SMA. We'll see if tomorrow and Friday we kind of stabilize and basically just float into the weekend.
Yeah, and actually, when you look at that chart, it's like a 5-minute chart. You're in the middle of it. So forget where it ended up today. It doesn't matter. The thing is that it's right dead on it. Now, can you bring up XOM? And you'll see, without even going XOM, that it's in a position that you're going to see it go back up to 57.
Well, an XOM is a way to play oil.
It's a great way, and it's one of the ones in the Dow. And you can see that how far that has been oversold. And so what happens is that if they buy up the Dow, it'll help shore up the shares of XOM. But also the thing is that that's about the most that's been overextended. And so I'm looking for a push on that. I think it will probably drop to 54. And then I would not be surprised to see it hit back to 56 by the end of the week. That's what I would think.
Yeah. Interesting. And then I think, did you mention gold as well? I know you've been
GOLD, yeah.
tracking gold. Another one that may.
Yeah, see how it's down to 1946. Now, the following week, I played the 2050 calls. They were pretty cheap. I would think, I'll bring it up on mine while we're looking at that. I got to think your 20 calls that probably would be a pretty good play, especially if it starts down tomorrow. I gotta like the 20 calls, or at least the 20 calls for next week too. Those are going to should be great plays. I find they're cheap. They really are. I'm going to bring it up on. I'll tell you what they are, but they should be pretty cheap. That's my experience. Yeah. Let's see here. What would be Target was had its earnings today.
Nivea did too, I believe. And I think, trying to think of where I have it. Earnings Whisper. Nivea, Cisco. I think this is today. Today's Wednesday. Nivea, Cisco. That's the major ones.
Yeah, so now this is beautiful. So this is the play I want to do. Unfortunately, I got a little sidetracked today. The gold 20 calls are only at $5 each. So even at 30 contract, that's 150 bucks. And gold should come back to 2075. So in theory, you easily could go ahead and see it being worth 50 cents. So if you buy a $20 call and you get in at 150 and it goes to 2050, how much is that?
Sorry, I was looking at actually the high today of gold was 20. So yeah, really for $5, that's a nice play or interesting.
$5 a contract. You got 5 times 30, that's 150 bucks. And then if it goes to 2050, then that's 50 times 50. Now you're at $2,500.
Right, yeah.
This is the way we play it. This is how you find these things. Now, I gotta think next week it's probably gonna be too expensive. That's why I don't like them. You could get the 21s at $6 a contract
for next week.
Yeah, not a bad deal, but what it is that your SMA tells you everything. SMA is at 2079. So, it's not a great play. I'll tell you the play I'm in right now. Go to Rite Aid, stock that I literally hate. And you'll see that in my book. I kind of kick myself in the ass a little bit today. Oh, that's not, that's the 3-month chart. But you see the SMA on that one is at $15.58, $16. Can you bring up the options on that?
Let's see here. Option chain, red. So here's this week's.
Yeah, do you see why I'm in the 16 calls?
Oh yeah, look at all these numbers. And what is that? 580, 678, 960, 1100 to 245 in the money. Yeah.
That's nothing. And then I like that thing at 20. Look at the 20 calls at 47.23.
Oh wow. Yeah.
Am I in a big position? This is where everybody makes a mistake. So I'm in 50 contracts. I think it was 200 bucks. This is, it's reliable, but is it worth it? Not really. So but what I'm saying is that you had an issue with the Fed today. The Fed went ahead and I thought had pretty good news, but it seems like it's a given. When the Fed gives news, it's an excuse to drive the market down.
Right. Yeah. What'd they say? They're going to taper bond purchases? I don't know. I didn't even.
Sometimes but I don't know. I read it and I'm like, oh, it's good. Then all of a sudden the market went up, and then all of a sudden they digest it, it goes down.
And I saw that. I think I was watching the SPX, and I saw a tank, and then.
Yeah, but it went up first.
SPX.
Probably right there.
Oh, here's the 5 minutes. So yeah.
Yeah.
Recovered, totally tanked.
Yeah, but you notice the first when the news came out, look at the green.
Yeah, totally bullish.
Yeah, and then somehow but I don't think it has anything to do with anything. This is what people get confused. The thing is it was bullish. Everybody was running to buy, and then they ran out of buyers because it was overextended, and then it went down, and then it recovered, and then they totally ran out of buyers. There's no long-term buyers right now going into the Jewish high holidays. It's just not. It's just, you're going to have buy-in, but it's not going to be like it was.
Yeah.
Really want to be, because what happens is that it's not that people plan on selling. Everybody wants to bring it right up, to September 1st. Because after September 1st, it usually tanks. It's 1,000-point drop, somewhere in that range. That's how it works. But if people start heading for the exits, then the thing is they're not going to take a loss. So then they start to do it. If you can bring up the options, I'll show you something I made 300% on today. It was a great trade.
Options on.
I'll show you right now. It's on the Hood, HOOD.
Robinhood.
Yeah, but see the 23,000 there?
Yeah.
Mm-hmm. Yeah.
Oh, nice.
Me
6%.
right there. Yeah, but that was today. I got in yesterday. It was more than that. But the issue is that those numbers were there. That 23,000, that those two 8,000s were there already. That 8,000 and the 8,000 on 55.
Oh, in the OI, yeah.
So the thing is that I knew they were going to make a move on it today. So should I stayed in more? I don't know. The thing is I took my 300%, so forget it. But they tried running it up. They sure did. But the numbers were there before. I wouldn't have got into it. So when I look at a graph like this, just so you know how I look at it, the money players were at 50, 23,000. The hammer was at 52, 11,000.
Yep.
The stack's going to run to 55. It probably will still do that.
Let me see where our high today was 52. So
yeah, and that's where I got out. I got out much. I had a really nice profit going on, so I said, heck with it, So I was right off 52. But see, do you see what I'm trying to say? The hammer was at 52.
Right, exactly. Yeah, these 3 volumes.
Yeah, and I think if we didn't have this whole Fed thing, I think it would have ran to 55. I mean, I'm just telling you that's what it is. And I think in aftermarket, I think you had people that just bailed on it. It's my memory on it, because I'm like, well, it's a good thing I got out of this thing. But to me, I don't really get too excited about aftermarket or stuff, because I remember being on the exchange, and they used to always say that the key sits down $4.03 in aftermarket.
Yeah, 8%.
That's a lot. What? How'd you know that so quick?
I looked it up on CNBC.
Oh, okay. I was gonna say, wow. Thinking like, oh, that's pretty good stuff. So now I don't think they'll play, but what happens, it's very fascinating, because the exchanges, the New York Stock Exchange does not know where that's being traded, because they close at 4:00.
Right.
So this is what they call dark pools, because they don't know where it's being traded. I mean, literally, this is where you have the other exchanges that kick in. But is this being traded within an exchange like Fidelity? is it being done on these other ones, where they have, the other exchanges? Nobody really knows. So you had, in after hours, you had 3,639,000 shares that were traded. Question is, where? And if somebody could tell me where those were traded, I'd love to know the answer to that. Because the thing is New York Stock Exchange don't know either. Their only mission is come tomorrow at 9:30. It's their job to determine what that price should be from it being traded after hours.
Yeah.
And so that's actually a bigger job than you think, because they're trying to make a fair market. But this Robinhood could go ahead and go down $7 or $8. This one is for the record books, because they're trying to force this up, but they're having a hard time with this one. And I still don't know what is holding up the other stock, GameStop. I mean, I think that's still up there at 150, 200. I mean, that makes like absolutely 0 sense. The stock that has
157.
So you're talking a stock that's got a negative thing. You don't really, I mean, they make no money, they lose money. So tell me, why is it worth what it is?
Yeah, and we've looked at Fidelity in regards to the balance sheet and analyzing a stock and its growth versus debt. Maybe we should talk about that next week. We're looking at that next week again. I don't know if we have a video
Yeah,
on that.
That's a good one, but you had me wondering on that one, because that will be on the main page of it, which will tell you exactly what it is. But if you go to the key statistics, and you will always see that its market cap is $11.3 billion. And it has income per employee, negative 3,332 per person. Total debt of 203%. So,
right, yeah.
Return on equity minus 23%. So, I guess the only thing you got going for it is they have seen an EPS growth, but they only have cash flow of 86 million. So if they were to sell the company or liquidate it, the stock is worth 86 million, because that's what the cash they have on hand. So how is it worth 11 billion?
Right. Yeah. Right.
Yeah. Yeah. All right. Excellent. We'll talk about the other stuff next week.
Yeah, definitely. Yeah.
So,
well, thank you, Alan. Thanks for being with us.
All right. Well, have a good night, and we will chat soon.
Sounds good.